All right, what's going on, everyone? Today's FOMC, as we know, is about 10 seconds until fundamentals drop and the markets will react. So let's see what happens. Typically, we know the market does tend to pull back towards market open lows. So this is why I don't like to trade the 2 p.m. of FOMC. If David Lisiaga, you on the call, bro, this is what I was talking about. Yeah, there it is. Okay, and I'm assuming numbers came out even, exactly as we called it. Yep. Prior prior to this webinar, we talked on Sunday, or was it Monday? And we said that the market will probably continue to give out the same rates. The same interest rates will be maintained because there's really no reason to lower interest rates right now or increase it. I mean, the market has priced in the way the economy is moving. It's a lot of uncertainties, but at the same time, the numbers are not showing that companies are really losing out on money like that. And as much as we are going through a lot, the economy is putting a lot of pressure on the average American or globally supply chains are getting hit, but the funny thing is, like, despite it all, we still gonna have to buy. We still have to make purchases. We still have to stay within our means, and we still have to buy the non-negotiables, which is why, like, when you look at the numbers, no matter how bad things are feeling for the average American, they still gotta buy milk. They still gotta buy water. They still gotta buy juice. They still gotta pay their bills, even if they're behind on rent. So this means, as much as the pain point is felt, there are still people thriving. There are still opportunities. The jobs are not putting that much impact as far as losses. So this is why I can tell um, interest rates are still remaining the same. And plus, if you if you're the new Fed chair, you're in no rush to just drop interest rates. This might happen later in the year, but not immediately now. Okay, so Um, this is beautiful. The retracement that we were looking for is all over the place, all over the charts. And this is why you don't trade the 2 p.m. of F1C unless you just had plans to just trade it back to the market open lows. Perfect example right here. Let me make sure this this screen is getting shared. Okay. So this is what we were talking about with FOMC having a very, very specific tendency of just coming back to market open lows. You guys notice where it says 9:30 here? Soon as 2 p.m. came out, they literally retraced right back into market open lows. That's a thing with FOMCs. This is a lot of selling pressure. Same thing with gold. We were trading between 9:30. Structure was looking pretty good. But this single candle brought it right back to the 9:30 opens and pre-market. So um, I don't know why I never trade that kind of trade opportunity, knowing that this is what happens. But guess now I'm being very cautious. But damn, that's beautiful. Ooh, we just like that, 560 pips. Anybody in any trades? Hopefully not.
I
Trading,
closed myself.
nice. You just took that?
No, as soon as 2 o'clock came, I put a sell stop in silver.
Okay. Nice. That's tough.
I wish I held because it's still going, but hey, I closed in profit.
Yeah, no, that's good. That's beautiful, beautiful. Yeah, if you're gonna take any trades in FOMC, usually take a counter trade back to where the morning is. Trading pre-FOMC like before the afternoon, usually clean price action. You don't plan on staying too long, but yeah, once the market retests London lows, typically you got to trade. You got yourself a trade. So, did anybody trade this morning? Charles Lane. Good God. Shit is dropping.
Yeah, but still dropping.
Still dropping.
I got in silver with a micro with the little
Mm.
baby.
I'm in YM cells.
Ooh, beautiful, bro. What made you take the cells? Power of three?
Nah, there's that gap down there, and I know it needed to be filled, so I
Mm.
was like, they can't just run higher without filling that.
Mm-hmm. So you think price is gonna go all the way uh into the
It's a
gap right
different
here
chart.
for gold?
Yeah. I'm not trading gold, so but yeah, I think it's gonna fill gold too. Yeah, right there.
Mm.
Oh, I thought you was looking at US 30.
They both look the same right
Yeah,
now.
yeah. I think it's gonna go all the way down there. I'm trailing
Let's-
my stops though.
yeah, good idea.
Yo,
Saved your ass, my boy.
you did save my ass, bro.
And what did
My
I say about the tendency
yeah.
for FOMC?
You was right, and I'll let you know this. Like the bot I've been programming and testing, bro, it's been in buys all day long. And then once FOMC came out, it sold off, bro. Like on the master account, I just made about like 7 grand in a minute.
Tough. Yeah, the tendency for US 30 gold, soon as 2 p.m. hits, no matter how great price action was, they usually just reverse right back to where the morning was. So, yeah,
Right.
yeah,
Well,
that's why
thank you for that, bro. I appreciate you. And something told me to call you.
yeah, your ass is lucky as anybody right now. Yeah, I'm glad you did.
All right, I got stopped in profit.
Beautiful. We love that. We love that. Obviously, for those who trade GA, like FOMC got nothing to do with GA. So, but price is still returning back to like to the previous day's low. Um, this is the usual time where you start to drop into a lower time frame, start to look for reversal signs like this one, and then your only job is to put the stop loss below this low and see how things go. Especially when we're returning back to 1 hour time frame structure. Okay. This is for you specifically, Sandra.
Dang, your boy Same had gotten cooked.
Oh, I don't follow him no more.
No, he had posted in his Telegram like a buy chart.
Mm.
Like he was anticipating buys basically.
Oh, okay, okay. Yeah, I mean the buys are for sure coming, but this retracement is God given, to be honest.
It ain't coming right now.
Yeah, right. Yeah. So
He
we gotta
said,
just wait on the retracement.
God given.
Hell yeah.
You
Hmm.
funny, bro.
Yeah, man.
You are funny, my guy.
Temptive.
But yeah, man, I'm
Finally, Nas did the drop.
Oh, let's check Nas. Let me check the chat as
Yeah, Nas. Oh my God, Nas got me. Of course, I got it back, but Nas got me today. Like
Yeah, you were expecting
Yeah.
buys too, right?
Um, no, I was in a sell. I was expecting sells today. Like something was just telling me, like the chart, the candles was telling me a sell story,
Okay.
but it was just wicking, you know. It was
Mm-hmm.
wicking. It was wicking too much. So
Wiki,
I was
wiki,
in
wiki.
profit, but didn't take it because I'm like, oh, I think it'll go down more. And
Mm.
then they
Yeah,
just kept kind of buying up. So
it was
Ex-
very wiki. I lost my funded today.
Oh, you're owner. You lost your fund, man.
Yo, you know what's crazy, Hans? Like I
Yeah.
literally turned off the copying from MT5 to my funded account on Trade Locker because I was like, I don't have that much room.
Tuh. Yeah, bro, you
and
did the right
and
thing.
no, bro, because if I would have taken these cells, like you know what, I did do the right thing. Because if I would have taken these cells, then I would have had a much bigger problem, which was um my whatchamacallit, my consistency rule would have been all
Cooked.
over the place.
Yeah.
It would have been I need to make 100K on this account in order to get a payout.
Mm-mm-mm. Time and time again, you guys, when y'all hit me in the heat of the moment, I'm very glad to deliver because it's like times like these, you need somebody or just an accountability voice just to confirm the decision because it's like we feel the buildup coming and then the right decisions don't always get made and we've all succumbed to that. So um all right. Now we got to see what's going to be said by 2:30. But as traders, sometimes we don't even really care. I mean, we really we about the charts. But at the same time, like it's the first time the Fed chair is going to be speaking. The new Fed chair is going to be speaking, but I don't think it's going to change much, but we'll see. We'll see. Once the market does fill said gaps, I'm interested in seeing like how the rest of the week goes by. See what's up.
like Friday's a holiday.
Always forgetting about holidays, bro. I guess
Yeah,
both are
Yeah.
Juneteenth, bro,
holidays.
Juneteenth.
You can't forget about that. You black
Yo, you
man.
you you a bad Haitian, my guy.
Now I know what May 18th is. You feel me? I know what January 1st is. I won't forget that. But Juneteenth has just finally been officiated like 3 years ago. So,
No,
and in my head just now, I didn't even realize Friday was the 19th. You get me? Like the processes of information is just going so fast in my head. But yeah, June 19th is always gonna be Juneteenth. You get me? We can't forget that. If y'all said June 19th, I would have been like, oh yeah, Juneteenth. Sometimes I don't even be
but the fact
knowing
that we said
what.
Friday, you like, what do you mean Friday?
Right. It's like Friday. I'm thinking NFP, huh? Like shit crazy.
Nah, I really know because my kids don't got school.
Right. It's like nowadays, man, the days mean different meanings now, man. Like unless you specifically say what that day is assorted to, you might miss me. Might miss me, man. All right. Not too bad. Natish, you lost that account. Damn, what was the idea? What was going on? Is it Nas? Too many attempts?
Uh, no, I was trading minis because I was hell of confident that it would be a buy,
Okay.
and I traded with three minis, probably around $1,500 worth of risk.
Okay. Well, hey man, charge it to the game.
I'm so disappointed because I was really disciplined throughout the eval, and I made sure I ticked all the boxes.
Yeah.
But this is I've been in a gray area lately where I'm passing accounts without any hesitation, without any problem, but I'm just unable to hang on to the fundeds. It's been happening for a while, so I don't know. I've been taking it very slow. Uh, it's been crazy, but I don't know how long I'll be able to sustain this.
Yeah, I understand. However, you have to I don't want to sound like the person who's got the right answers. I'm gonna just tell it to you like it is. Every trader goes through that feeling of impatience or it's like, man, I can't wait to get that payout. You're trying to get the eval out the way, but the real the real battle is just like trade the same pace, man. Trade the same pace. Now you lost this
Hmm.
account. I understand no one else is gonna feel that disappointment as worse as you, but no matter how great you feel about an anticipated day like this, you know what I always tell you, like the next day, Thursday, is much better. The
Right.
next day, Thursday, literally usually like retest the same
Hmm.
zones, the same zones. So, um, the risk was a little much, which is why you lost the account.
Yep.
But even if you do feel amazing about us, an anticipation, don't risk too heavy. Just risk what can be lost for the day so you can be okay.
Yeah.
You know?
Yeah. The good thing is I have a bunch of accounts that I brought up, and I was only doing one at a time. So I just
Yeah.
lost one account of like five, but
All right.
four other accounts are very close to passing. So I'm at least happy about that, being very honest. But
Yeah.
um, I think I just went into that gray area, the dark mode, where I was like, ah, no, I gotta do this because this is like my time kind of thing, and
Yeah.
I guess I rushed into it and it backfired. But nevertheless, it's okay.
Yeah, bro.
You
I
you know what gets me is like during the eval phase, right? The
hmm
markets run
Yo, God
beautifully,
is on my
right?
side. That's all I gotta say,
And
bro.
as soon as I get funded, that's when the market want to consolidate and start running all shitty and shit like that.
Right, right,
hmm
Happens every time.
hmm
Every time.
exactly.
And it's like the market knows how to trigger us, right?
Uh-huh.
And
Yeah.
to be honest, I'm gonna start paying more attention to these triggers. It's like, bro, it's like every time. It's like, okay, then what the fuck should you do then? Probably slow down. And it's always now what happens after though? It's always the next day where you did rush it the day before, then the better price action comes, or it's the next week. So now my goals are like, hey, if I'm feeling that the market is bringing this type of emotion, I'm gonna just start planning for the next week instead. Because I can tell every time I'm hella upset about something, right? And it's triggering my emotional strains or whatever, then it's like the next week. I'm like, oh, okay. I see the trick. Somehow the brain patterns keep making me feel that it's like the thing that I can't control, but then the deja vu that I keep seeing that triggers me perfectly, and then the relief or the what the fuck, like, damn it, bro. Like, why is it always like the next week that this happens? It's like, oh, I guess I'm gonna have to start thinking about the next week. Stuff like that. Cause we all got to deal with some sort of demons, right?
Yeah.
Shit is crazy.
I
Ugh.
mean, I think it was Antoine who mentioned that. Like, that's crazy because it has happened to me so many times. Like,
I know. I know. It's
like
crazy though.
every time you know that your setup is good and everything is pretty much evident, but the market decides to do its own thing, which of course it has every right to do so.
Yeah.
But then the worst part is, after a while, you come back to the charts and you see on the same day your shit actually played out. Like your bias was actually on target,
Mm-hmm.
but the market decided that it just wanted to play around. So that's what is like really frustrating, and I think that's what has been like really eating me up. I get really frustrated, and I've got really frustrated because I was so close, and I've, like I said, I've been very disciplined in how I trade my evals. But I guess I think I need to just keep on replicating the same way throughout. That's the only way I think I can get a payout.
Yeah. Let's talk about tough pills to swallow, right?
Hmm.
That same discipline, you don't get rewarded from that discipline that took you to wherever you needed to go. And then all of a sudden you stop being that disciplined. Like it don't take you nowhere. And I hate those pills, right? Because they're really tough. And when you do want to go aggressive, still go in a way that it's not gonna lose the account. Cause that's the one that hurts the most. It's the one that makes you feel like, bro, I don't even know if I got it in me to pass another account, and I just feel like it's getting lucky at this point, you know?
Fair point.
I appreciate y'all for still running this race. This race is something. This journey is definitely something. But it's the pills that we gotta swallow that's always the toughest to just make peace with. But if it's for the other side, we gonna have to do what it takes. The next FOMC, let's see when that's gonna be. July 29th. Interesting. Very interesting. July 29th. And then after that, August. Let's see if there will be some beautiful swings starting in August. Been anticipating these sort of things, especially since we've been back testing for a minute. We noticed that one of the best rallies that gold has to give starts out after July. But that's going to be like with some conservative positions, no matter how much the pullback happens. Like, those of y'all who really want to experience something like that will have to load up a $300 account, whatever, $400 account. You know what I mean? Like, bare minimum, but something that's going to start a swing as if you have a portfolio. August 2024, same thing. End of July. August, end of July already started the rally. Then in the first week of August, they pulled back, but they still respected end of July's low. I actually remember this. Damn, I freaking remember this. Ugh. It's a lot of stuff I'm correcting in my own trading, guys. And I'm like, yo, I was right there. I was right there. But what made me feel away is maybe a weird pullback or blah, 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 blah. But when you look at the rest of the month, if you held and you didn't worry about that pullback and you considered it as just another opportunity for entry, you wouldn't have known. But the confidence and the confirmation didn't come at the time because I'm like, what if this August is different? Or what if I'm wrong this year? And then I wasn't wrong. So position trades like these, long swing trades until the end of the month like these, you gotta be able to get in position around the areas of interest, the demand zones and such, and just know that you are to not touch this damn thing until the end of that month, at least. Yeah. No matter what pullbacks happen, you can't touch that joint. Don't
Let me
feel
find
no
out.
type of way.
You talking that kilo over there, bro?
Yeah. Yeah.
You talking real spicy, man.
No, you could tell the swing. Definitely planning on some murder. Yeah, it's that type of time. And y'all know I've been telling y'all way before your favorite guru was telling you the shit. I'm gonna just tell that to you now. I hate that I still don't know how to really market myself the best way that I can, but my webinars is fire. The value I drop is fire. The shit that I tell y'all plays out over time, but at the same time,
It's okay. Like after what just happened, Hans, I just talked with my partner, and you know there's a home for you with Pipsy. So
yeah, I'm down with the conversations. But yeah,
yeah,
man, I touched a lot of figures with this market. I've fucked around and lost a bag in this market. But one thing for sure, I always go back to see what I could have did better, you know? But
Yo, you in my conversations.
I know. I
Yo,
don't doubt that.
you in my conversations because this is a conversation I literally had today.
Mm-hmm.
In gold, that one candle, it tapped the high, and then there are two 15-minute candles back to back. It's about 10,000 points total,
Yep.
right? On the sell.
Mm-hmm.
And no news, no nothing, da 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 da. Didn't hit a zone, didn't hit anything. And then it just went all the way back to where it was.
Correct.
And this guy asked me, he's like, yo, why are you so pissed off? And I literally told him, I'm not pissed that I lost. I'm pissed that it makes no sense, so I can't learn a lesson from it. I'm like, L's like losses are just lessons. But I'm like, fucked if I take a loss and I can't learn a lesson, bro.
Mm.
You know what I mean? Like, I need like it wasn't going to be okay with me until I figured out why. That's how come like I'm like, who do I know trade gold? It was either gonna be you or John Brady that I called. But I got a better relationship with you. Like you my homie.
Yeah. Appreciate that. Appreciate that. Oh yeah, that's what I was gonna tell you. So here's the reason why. No memory card. Oh, I need a second camera. All right, so here's the reason why the market usually goes back to an area where like it came from in the morning. Is because again, we have to remember this market is all about bid and ask prices, bid and ask prices. So the same way New York comes back to retest London lows, they're repricing it there because that's the marketplace where they're asking for a price right there. It's like the exchange is happening from there. So it's the same way. Like when news comes, the algorithms and these guys, the institutions, they bring it right back to where the demand for price, the exchange of price was happening. So it's not a real coincidence for real. It's just like you got to understand where is the purchase point at? You feel me? Like if you if you go to the mall and you buy some sneakers, right? And for some reason you feel like you want to buy another colorway, where are you gonna go back at? Right at that store where the exchange is happening. If you want to change the color, if you want to buy another sneak of the same color as the same price, you're gonna go right back to the point of interest, point of purchase, the marketplace. That's how y'all gotta understand these things. Sometimes it's not just candles, it's about like the reasoning behind why the market is doing what it's doing. That's why like I tell y'all, hey, I'm anticipating these fund rates, right? But I also tell y'all why it won't even really much matter because there's a few things that price has to do. But then there's a bigger picture to keeping interest rates the same. That means, oh, okay, show goes on for indices. We might pull back, which is great, but show goes on. All right. Hopefully, Action Jackson didn't just get in here.
Yeah, I just got back, so I can't even do nothing today.
All right,
What
all right.
happened? I feel like some cells off.
Nah, I just dropped some sauce. I just dropped some really nice sauce. Can somebody kind of give a quick recap on what I just said here that just hit them in the head? Somebody else needs to hear it.
You probably talked about the 4 hour.
Nah, you
Oh,
ain't hear that. Like you ain't hear this one before. All
What's
right,
up,
who?
Lamel?
what's going on? What's going on?
He basically was just saying how when it comes to FOMC, most likely they're going to be targeting the lows of the day or the highs of the day um at 2 p.m. open. That's what you mean, right, Hans?
Mm-hmm. Mm-hmm.
Oh,
Reason,
liquidity sweeps.
reason being, keep going. You're doing good. Yeah, it's
Um
my song.
yeah,
Yeah.
you know he watching his stuff.
Body say
Um
da, da. Go
Hold on,
ahead.
I'm about to jump in the charts in a little bit, but is it
Hold
still
on, hold
moving?
on. Don't go nowhere. There's more where that came from. Continue,
Oh, no, I'm
please.
listening.
um I don't remember everything, but I know you was just saying that how you have to target That's basically where you would be targeting on the FOMC at 2 p.m. I know you said why, but it's not clicking right now, but it's gonna come to me.
All right, that
It's all
perfect.
well. That's one of my styles of trading because I always personally been an intraday session trader, so I pay attention to those. But as far as the interest rate, they stay the same, right?
Yes.
All right. So I was curious if US 30 and all the other indices was going to sell off because based off the price action,
Mm.
I was seeing.
All right, so
I
let
don't
me
know.
recap real quick, guys, because this is why I
Jump on the
like to
cards.
recap. It's either somebody else shows up or we got to say it so it can stick. Okay. Because truth be told, you hear a statement, but then trying to repeat the statement is like a new level of art. He's like, shit, let me kind of emphasize what they said. Right. So I said, usually when the market opens at 9:30 on FOMC, the market usually works very well. Like it plays out. If it respects London session lows, you got yourself a trade. You could just take those buys if the market was already bullish. Okay, he's talking now. Okay. Um, I'm gonna finish this point. Now in the afternoon, typically, if even if price was moving going crazy in the beginning of the session, by 2 p.m., usually price returns right back into the marketplace, the asking price. It returns back to the 930 lows. It's like reversing or retesting those areas of the morning hours. So that's why typically it's best to just wait or maybe take the counter trade with the risk that you know comes with it. Even if you feel super confident. For example, like Natish was saying, you remember that that's a behavior that typically happens. Okay. And I made an example by saying if you bought a pair of sneakers and you went home and you realized you wanted to buy that pair of sneaker because you feel like you like this sneaker so much you want to buy another one, you would have to return back to the mall where the purchasing place is. So the same thing with the market is sometimes price reverses right back to the morning hours because that's where the purchasing hours were. Does that make sense, guys? Is that much more
Facts.
clear
Yes,
for
sir. Yes.
everybody on the call?
Yes, sir.
Okay, that's why that happens. Okay.
Supply and demand.
Yeah. That's in a nutshell,
That never
supply and
fails, bro.
demand.
That's in everything
But
I
when you
see.
in front of the charts, you got to be like, okay, I'm taking that trade because it's going right back to the 930 lows, and I'm gonna take that trade and I'll put my stop loss above there. Now that's execution. You get me?
Yeah.
There's knowing the general term of things and then having the balls to make that decision and make that call because you've seen it happen and you know why. You get me? We all know how the market works. But to press that button that day on FOMC because this is how the behavior is, that's a whole nother demon. And you gotta be
Man.
ready. You gotta be ready, like mentally, like, yo, okay, I'm gonna take this because this is why, and this is usually what happens, and the market goes back to in the morning hours. Okay, let's take this trade. All right.
Did y'all take any trades?
Not today.
Uh, my
Some
bias,
people did take them trades.
yeah, my bias definitely, because I always mess with GU and EU. My bias was definitely sales because I kept looking like back at on the 12th, the 11th price action. I'm like, yo, I know price gonna come around this area. Got to all that buying pressure from that area, but I wasn't there to pull the trigger, so I was like, damn,
Yeah, I feel you.
it's all right.
So good. All right,
So
let's
I'm
see what
still
Mr.
working on
Walsh
house money.
says.
So
Let's see what Walsh says. The hell? This thing got way too many commercials. Hold on. Let's go to the come on. Let's use the one from CSNBC.
At least as currently structured. In the median projections, real GDP rises at 2.2%
You
this
probably gonna
year,
ask, where's Jerome Powell?
2.3% next year, and total PC inflation
Yeah, I was
runs
just
at
saying the new
Uh-huh.
power.
3.6%
Yeah,
this
you
We
year,
gotta
out
get
you
used
out
to
of
this.
here, bro.
2.3% next
That's the
year.
new power,
The
This is the
unemployment
new
rate
power.
stands at about 4.3%.
the younger version.
The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas
He
that are
nervous.
central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall, and hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby.
Thank you so much. Colby Swift from the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, you know, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say there, Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. and they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Chris Rugaber.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors.
You know Jerome wrote that
energy.
one.
The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
He's going to probably
And
start
just
saying
on
ambiguous
your-
on everything.
The
Uh-huh.
task force and everything
Remember
else.
transitory?
Generally speaking, I think people feel the Fed looks at
I
everything
do
already.
remember.
Certainly, that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trimmed the mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be the? I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data, they'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Yeah, that's probably coming in like in December.
Thanks a lot, Jones, Financial Times. You know, coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement at me than improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
All right.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first-order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the President since you're swearing in?
So on the President, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed Chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central banks objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve?
All right. I
Steve.
think we've heard enough here. I can tell like he's very sound-minded, the way he's talking, and he's very polished. Obviously, this guy's an Ivy League guy, as was the previous Fed chair. But you can tell this is someone who's very well spoken, balanced in the word choices that he's using. Something that honestly I haven't heard in a minute from like a politician that seems to want to give you a good sense of, oh, we're trying to do the right things here. As expected, someone who knows damn well, like you're this is your first meeting. Everybody trying to listen to you and see what you got to say and see whose side are you on. Are you someone's puppet? Are you sensible to the prices of gas and milk and everything going on? Do you understand the seriousness of your job? Or is this like a fun thing to you? Or do you just feel like, you know what, I'm getting paid regardless? Are you really into are you getting your hands dirty? And if Trump says jump, do you say how high or what's really more important to you? So I like the questions that the Asian guy asked. He was like, yo, Mr. Chung. He was like, hey, so if you were to walk into, a grocery store and you see those prices and you're having a conversation with somebody, like, would you tell them there's a mandate that's helping to bring those prices down? Obviously, that's not a question you can answer lightly. But unlike Trump, who says, oh, well, I'm not worried about the American people right now and I'm doing these deals. What I'm really worried about is getting these deals done. It's very insensitive. It sounds very tone deaf, right? As the president of the United States. But as the Fed chair, he was like, you know what? Those are priorities, but at the same time, we're not using that as a centerpiece to getting stuff done. We know it's part of the problem, but we know that for the problem to get resolved, we have to take care of the main problem. But at the same time, Iran and all these different deals does impact our decision making. For example, last year, I remember Jerome was like, look, we had a whole decision to see about lowering interest rates, but then tariffs happened. And we were kind of like, yo, we can't just drop interest rates now because now things are uncertain. We don't know how this thing is going to go. So this is why it makes sense to just play it safe and just keeping rates unchanged for now, right? Because rates unchanged mean the same way you driving you're driving on the highway, right? Speed limit says 70 and you just saw a few people get pulled over. Are you going to keep driving above 70? Nah, you probably going to stay right at 70 until the coast is clear, right? You're either going to decrease your speed if you notice that everybody else is decreasing their speed. And I say that with the connections of, hey, you'll notice the different banks will decrease their interest rates if they see that the United States decreases their interest rates because they're all in bed with each other. So what I'm seeing on the markets here is just the reaction. They're bringing it right back into like discounted areas and the huge gap that was here. So far, yeah, we might be pulling back inside these ranges. So I'm definitely gonna see about tomorrow, see if maybe price will just continue selling off. We'll also utilize this area as a 4-hour high being swept. And so the reversal definitely made sense on the higher time frame too. But do we have a trade right now? No, we don't. I see Douglas just posted about his GU sell trade that he got in since Asia. It's a nice entry. Okay.
That's a
That
beautiful
good old
entry.
breaker
It's gonna
block.
say
Uh-huh.
beautiful entry.
Mm-hmm.
Yeah, Hans, I'm happy you mentioned discount because I had recently learned more about it. I mean, not recently, but like it's been like a month or some change, something like that. I had learned about premium and discount
Yeah.
because sometimes it be just so like aggravating when I'm hearing certain terms and I'm just like, damn, like what does that mean?
Yeah.
So I'm happy I could follow along with what you're saying.
Okay. I'm glad that it's made sense. You know, many times we will say things that might go over people's heads for real. I like the word discount as well as a term where we can tell like if price is going up and then it pulls back in, well, price got a little less expensive to get in for buys, right? So that's what we mean by, oh yeah, price is pulling back inside into discount. Right? It's retracing deeply into areas of demand. That's what that means. I'm glad you brought this up because some people probably are like, what the heck is a discount? Like, I know what a discount
Yeah,
is at the store, but does that mean the same thing on the charts?
that's
Kinda.
exactly what the same thing means.
Exactly. Exactly. Glad you brought that up. Anybody glad we went into that? So what's premium? Premium is when we're in supply zones and price goes above to sweep liquidity up top. And then we back in here again. Well, price is at premium before it sells off because that's the highest, most expensive that they catching it from. Um, of course, like those who want to sell the market want to get in that premium before it sells. Same, same with us when we want to find the best entry possible on the supply zone. Usually, when price sweeps liquidity up top and then ends up breaking retest, and we get in right here. That's getting in at premium. Sniper entry at premium. Does that make sense, everybody who knew or who didn't know? Does that match what you guys already knew?
Yep, makes sense.
Or is it new to you?
It's the same like if people who ever use Fibonacci as well, you can tell what the premium side is like. Look at the highest
Yes.
point in the leg.
Yes.
Draw your fib. If the price
Yes.
action is above that 50%, you're at equilibrium. If
Right.
you're around 61%, that's the sweet zone. Anything 70 to 80%, like that's definitely a good zone to get in,
Yep.
especially if price action or technical analysis is going your way.
Yep.
But
So
yeah, this is
as you
actually what I was looking for sorry. This is what I was looking for GU and EU, but it is what it is.
Yeah, perfectly said. So, just to piggyback off what you said, when you pull a fib and then the fib is pulling back in at the 79% on the supply zone, that's nice premium right there. It's like really good prices, really good entry, and your stop loss, outside above the supply zone. But at the same time, too, if you pull a fib and price is pulling back in, um, at the 88%, 79, 71, that's still beautiful discount because it's the cheapest it's gonna be before it takes off. Make sense, Sandra? All right. Okay. Well, let's take a look at the market on a technical standpoint. All that good talk sounds like economics, which it is, but um, again, we're also here for making money and anticipating how we're gonna make our money. So now, with the market basically having, let me not say the market, with US 30 having basically made a new high. Remember, we talked about that on Monday night. We would see a new high, but now, oh, I'm so glad I said last Monday night because I got something else I want to say. We might see price pull back in just towards discount, right? But I would definitely want to see Asian session or New York to just retest this price action here tomorrow and fail to go above it so I could take a nice sell. They're selling right now, so it's like kind of can't get in.
Bye.
Can't get in. Okay, so the other day we talked about stocks. We talked about SpaceX, and we said, hey, the market is great where it's at, but there's probably going to be a pullback mainly because, once the initial investors get their bread, some of them are probably going to want to exit, sell some shares, close out on some profit, and then so prices going to pull back into areas where institutions have already priced in the buys because they had to take sell positions or they had to sell to other investors back at that price. The way a lot of these stockholders and market makers move price too is like if they gotta sell some shares from those who are holding long term, they already kind of saying, yo, let me get 1 million shares off of you and I'm gonna sell it up top and then just make sure you fill me up right here at 182. Is that a deal? It's like, yeah, I got you at discount right here. And then they, so let me get 1,500,000 shares over here. Okay, that'll settle it. Okay, cool. So what we see is imbalance and fair value gaps, but it's money moves going on, right? So this pullback makes sense, and I see it a lot everywhere. So it's some profits being secured for sure. Long term, they got it, but short term pullbacks are not too surprising. So we did talk about that. I'm glad to see that this is what's really going on. That should not scare anybody. It's not a rug pull, it's just regular market conditions. Okay.
And remember the topic we talked about as far as rebalancing portfolios when
Yes.
new businesses come out? Because I've been doing both sides. I started in stocks before I even got the forex. So when new businesses come out, investors tend to rebalance their portfolio. So, for example, let's just say they'll sell some Tesla or Facebook to make room to buy SpaceX. And as far as the stock market, you got to be informed as far as new IPOs coming out. I feel like the next big one is OpenAI. And there's another one. I forgot the name of it. That's going to really move the market. So you got to think about it again. Okay, another new business comes out. I have to make a room to acquire more assets. So what I'm going to do, I'm going to sell off whatever I have that's
Right.
available. Like, what I mean? It's the same. It's the same thing. Supply and demand is everywhere in accounting. It's everywhere. Everything is about rebalancing their books or rebalancing price action. I just want to throw that out there. I'm a little sick, so my voice is a little
No, you
weird, I would
good.
say.
You made your point, bro. That was good. That was good.
Yeah.
All right, guys. That closes out FOMC's live call. Just please, during FOMC, don't try to overdo it. There's another day. sucks to say, but it's true. And consider maybe taking counter trades back to the morning hours when you're planning out your trades. But again, just trade responsibly so you can be all right with whatever circumstance happens once you take the trade. All right. Or will you? I know some people, they just can't help themselves. They're going to try and take a trade here anyway, not really knowing how it plays out. Good luck to you. But right now, it just does not give much clarity here. I'd rather price come back tomorrow, retest Wednesday's lows, and then that makes more sense to take trades instead of just, you know, instead of just taking a trade that don't really have too much of a good quality in it. Okay. All right, guys. Are we good on questions?
You didn't take any trades on today?
Nope. I take no trades today.
In the
Gotta be
beginning,
more
price action.
disciplined.
What happened?
I gotta be more disciplined like you.
Oh, what did you do? What trade you took?
Me?
Yeah.
I was trading Nas earlier. I took a L. I was trying to short it, but it just kept, like wiggling around, chopping up. So
Yeah.
it was a small loss. It wasn't like nothing too crazy I can dig myself out of.
Yeah.
But at market, I mean not at market, at 2 p.m. FOMC played out and I got all of my losses back plus more. So I'm green on one of my accounts. I took a sell on silver.
And I'm looking at Nas. Uh, yeah, I really didn't want to be trading in the beginning because I know how FOMC is because it just creates a lot of accumulation. So I'm like, nah, I'm gonna wait till FOMC to get. And I know a lot of times it comes to supply or demand. Like it literally, like even let me see. Tell me this was. Yeah, it really comes to like some really clean supply and demand. With Nas, I did notice that, price did break Asia session, then it came back up to retest on the 5 minute. With all our liquidity being present, and then what it just sold off.
Yeah, I was right about myself, but I just didn't take profit. I saw like $78 and I was like, okay, like, we're almost there to like my
Yeah,
small daily goal, but then it just disappeared and I'm like, oh no. And I'm like, all right, well, guess I'm just gonna close it out before it gets too crazy.
yeah. I was just trying to give me a couple $100 for the day, but it is what it is.
Yeah.
Like even with GU had a phenomenal 5 minute setup before FOMC, but I just
Mm-hmm.
wasn't here to take that trade. So I'm like, damn, I was trying to get back. I was telling my brother, like, listen, I need to be on these charts before 2 o'clock because I seen the trade.
Yeah.
Same thing with GU did the same thing with EU. So I'm like, whatever. But hey, that's pretty good.
Yeah. One thing I do want to say as well is that, with gold and US 30, you see this behavior way better. But with GU, for example, we notice that price is just selling based on structure, not that it's going back to 930s open, you know? So it's you got to know what pair you're trading, what asset class you're trading to know the behavior. That plays out pretty well. Okay.
For EU and GU, I will look at price action from Thursday, 1:30.
Go mute you real quick, okay, Quels? What'd you say?
Yeah, as far as GU, I was looking at the price, and the reason why I felt like sales was necessary because the rebalancing, same thing, like supply and demand. I looked at what is that day? Thursday, the 11th, June 26th.
Mm-hmm.
Yeah, June 26th. And I'm like, yo, that's a nice juicy area with a lot of buying pressure. So I anticipated price to come there, and I wanted to get it in a nice sell because I felt it was gonna happen. But I'm at this point when I've been doing this so long, like I'm not gonna just jump in the market. Like, oh, nah. If I missed, I missed it. It's gonna be another setup.
Okay. All right. Well, guys, this was a great session. Let's stay focused, stay locked in, and hopefully we do have more opportunities. Right now, we are seeing that gold did sell towards this area of demand where there was a gap. Beautiful. Let's see if I'm wondering if US 30 gonna give it the whole thing before the damn session is done.
Nas melted pretty bad in the last 10
Oh,
minutes,
let me
10,
check.
15 minutes.
Sheesh.
Hans,
Yeah.
how's working out going for you? Being consistent?
Yeah, I am. But oh, you see it?
We
No.
gotta keep each other accountable.
Yeah, no, I'm definitely keeping you accountable too. I was gonna check in about that. Um, yeah, me being back in my home, I'm definitely gonna be heading to the gym right after. That's why I was even picking up my headphones because I'm about to leave right after in about what 8 minutes. Just gonna go straight to the gym. Um, but yeah, like I hate when I have to not be home for like an extended period of time because we're just gonna have to keep pushing. But hey, by the time my birthday, just know.
Oh, yep, you got 3 more months. I got 6, so I got a little bit more time.
I see you at the top then. Wow, this is nice. Keep it up, Quells. Keep it up. Did you get the amino acids?
I didn't,
You
but
got to.
I do feel better.
That's
I
good.
think I think what it was is I just didn't work out in so long. And
Yeah,
my body literally just I was really out of shape. I'm out of shape still, but it's better because I'm feeling sore, but it's not sore where I can't walk in, I'm in pain. It's like it's a manageable type of
yeah.
sore.
You get used to it. The lactic acid
Yeah.
is not as bad.
Yeah, yeah.
But I'm trying to see what's up with the trying to see what's keep it up.
Yes, I will. I will. Not stopping this time.
Good, 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 good. What did I see the other day? Oh yeah. Incline. Well, I already knew that one, but incline finishers are really good for losing weight.
Oh my God. I used to love the incline machine, but now I dread it. I did like 3 minutes and I gave up. I'm not gonna front.
Yeah,
That shit is,
we ain't the same from 2020 COVID, man.
you feel me? Like even before then, I used to go to the gym like 2012, like all
hmm
those years, off and on, all those years working, But now I'm like, oh man, how was I doing this machine? I used to love it, but now I'm like, so now what I'm liking, which is still complicated, but the Stairmaster. I'm like,
Yeah.
okay, this is not bad. Like if you do it at like a slow pace, it's good because I still be sweating like crazy. I'll be tired, but I can feel myself putting in the work.
Yeah.
So
I
I like the Stairmaster. It's good. It's a good challenge.
good, good. Yeah, Stairmaster's pretty good too. Mhm. Here we have the 245 retracement that usually happens during FOMC for continuations. Quells, I forgot to acknowledge what you said about this being one of the peak FOMCs. Um, what's the word I'm looking for? Price action wise, yeah, and information wise and value wise too. Execution, obviously, we didn't take no trade, but I will say, like, part of me not trading FOMC comes from like these past FOMCs, like in late 2024 and even 2025, where like it was just not making too much sense for me to take the trade. So I kind of got like I still feel like I wanted to trade today, to be honest with y'all. But I just couldn't bear potentially feeling like I took a nasty loss because I felt overconfident and nothing like that. Like I wanted to make sure the data made sense. And so maybe next time you might see me take that counter trade on US 30 or something like that, even if I know it might come with a loss, right? Like once I make up my mind, I see the data, I see the behavior, then it makes me more um wanting to take that trade or taking the risk, you know?
Yeah, no, this FOMC was really good. I'm honestly surprised because the past FOMCs has been trash,
Super
but this FOMC was really good, price wise,
yeah.
my account wise, like it was
Right, right,
lit.
right.
And I
Yeah.
had a long day. I did hair, I did food shopping, I went to the gym, I caught
And
some
you was able to make
trades.
it. Yeah. Yeah.
Yeah, it was a good day.
Yeah. D, how you been? How you doing? Still got the account or are
Oh
you?
yeah, I still got it, and guess what? I'm getting this goal right now. So I'll talk to you in a minute.
All right, sound good.
Okay, get that gold.
Hey, that's D money.
Mm-hmm. D money up. D money's still around. Damn, what a drop.
Gold is going to
Bro,
the
you tell
flow.
yo, yo, I did my analysis this morning, bro. So I'm like, ugh.
I know, bro. Now this is the human part of me, not just the mentor who knows everything, who tell you exactly what you want. Like I low key, I'm like, fuck, I forgot the 245 retracement thing. But I really wanted to hear what Kevin had to say, but whatever.
I mean, it makes sense why it's selling so much too, aside of like what he has to say. Think about it. We've gone up and we did not fill none of those gaps. I think we was
Right.
just talking about this on Monday, like, oh, I think I actually like what you think about the gaps. And look,
Mm-hmm.
they filled it today on
Yeah.
all the pairs. Well, I don't know about Nas, but on silver, gold, I don't think Nas filled it.
Yeah,
Nas
it filled
Nas
it.
may fill it. Nas may fill it. No, Nas didn't fill it yet. It's not filled. And make it filled by tomorrow.
I mean,
Or
just about. No?
oh, you know why? Because I'm looking on TradingView like you, but I'm looking at NQ. I think
Ah, okay. I
yeah,
see.
NQ is it's a little ways ago.
Okay, 886.
Let's go. Let's go, D.
Oh, I'm done.
Now I feel left out.
All
We making
right.
him jealous.
Hey, come on now. I don't want to be jumping in no markets either. I'm taking options. Oh my God. I'm out. Let me close this out because I don't want to take no trades.
I feel bad for Natish. And sometimes, somebody pull up like, yo, okay, you know what? I fucked up, but maybe Hans can help turn this thing around.
Access denied.
Right.
Well, we all have our days and moments.
Yeah.
That's a
Yeah,
part of
and
the
it's
game.
still selling off. Oh my God. I could have, and like the human part, like Hans mentioned, like the human part is like, yo, it's still selling off. You could just get, nope.
Mm-hmm.
You see, Lamel, Nas is selling. I was correct. I knew we were selling today. And then also on the 1 hour, the 2 hour too is like, look at structure. It's no way this was a buy today. It's obvious they was going to sell. I mean, it's given in. Like
Right.
you can just tell this was a sell for today. They just was playing around. They wanted to take people's capital first.
Oh yeah, absolutely.
Snatch ankles.
Yeah.
Yeah.
You see, with me, like y'all know who been around for a while. I always have Asia mark, London mark, and once I start seeing certain like levels not being just strong,
Reached.
like
Mm-hmm.
know what I'm saying, I'm like, yeah, it sells. Like, look, they didn't bother to take out London. They always clip in Asia. I'm sorry for the Asian people.
Oh shit, no.
They clip Asia, right? I'm looking at now. It's on a 1 hour. Clipped Asia, goes back up to the same leg that took out Asia and played around for damn near what? How many hours? 1, 2, 3, 4, 5, 6 hours? Like Jesus. 10 hours. That's why I do not play during FOMC in the beginning. Nope. I'll wait for it to. It always retraces some clean setup. We just don't know. You just got. Oh, I will not say you don't know. I feel like we gotta just wait. Wait for that trade. I'll be back.
Mm. All right. Let's close it out right here. We'll talk soon, guys. Peace, love, and blessings. Thank you for always showing up.
Yo, bless
Okay,
up, yo.
bro.
Y'all keep trading. Keep trading. I'll talk to y'all later.
All right.